This is the most important week for Bitcoin since November 2020, as Bitcoin approaches a possible monthly candle close above the prior 2021 all-time high. In today's video, we're going to be diving deep into the macro and short-term charts. Let's get in. Okay, MegaWhale team, welcome back to the channel. Thank you for tuning in. I hope you're all having a fantastic day today. This is by far one of the most important weeks for Bitcoin since November 2020, as Bitcoin approaches that monthly candle close above the 2021 all-time high. In today's video, we're going to be discussing exactly what is happening on the macro charts, what you should be watching out for, what we expect to occur, and how to plan for the next move. We'll also be going over the short-term charts and the weekly charts to add context to our analysis. Before we do get into it, smash that like button, hit that comment button, and subscribe to the channel. We post daily videos for Bitcoin focusing on the facts, the data, the technical, and the structural information. No hype, no BS, no emotion, pure raw TA. If that is the kind of content you are interested in, join us on Telegram. It is the third link down below. You'll get access to charts, updates, videos, educational posts, news events, and everything you need to stay in the loop of cryptocurrency with Bitcoin and the relevant economic news. If you are interested in taking your trading to the next level, join us on VIP. We post trading setups with exact entries, exact targets, exact stop losses, trade justification, exclusive analysis, and so much more. You'll also get access to our group chats, our general chat, our trading chart and education, our news, our help, our daily video chat, and of course, everything else we have to offer. If you're interested in joining the community, go ahead and contact us in the pinned comment of the free channel. For more information, you can click these links. Let's dive into the video. So like we said, guys, a pretty big week coming up for Bitcoin as we approach that monthly candle close. On the short term, we have seen a large breakout of the falling expanding wedge pattern we have been discussing, moving into that 60k resistance and into this 2-month long uptrend for the last couple days. We've seen that breakout now pushing above 69,000, and in today's video we'll be discussing in detail exactly what is happening with the price action here and what we expect moving forward. So before we get into Bitcoin, let's dive over to the market data. 24-hour volume is sitting up 39.65% for the last 24 hours as Bitcoin moves upwards and we come out of the weekend in America. 24-hour volume sitting at a total of 197 billion. 24-hour liquidations up 17.33%, sitting at 185 million, so 185 million. Of the 185 million, we have 121 million from short liquidations and 64 million from long liquidations. So overall, shorts have definitely got wrecked a little bit moving on this rally toward the upside. Moving over to the broader market, so DXY, again, we are expecting a small little rise over here to either retest these local high points, and then we'd expect a short-term correction. We've currently established a short-term uptrend represented by this diagonal trend line with 2 points of retest, our first being our initial low, our second being a retest of the confluence point of the horizontal area of support at that 103 level. Again, while this trend line holds, we are expecting continuations to retest these highs. If we do break down from our trend line, we're expecting a larger correction to take us underneath these prior lows to retest the yearly low level at 101.5 to 101. Moving over to the broader markets, the S&P 500, like we said in yesterday's video, is looking pretty damn good. Again, while we hold above that major 5,000 trigger point, this red line, and our 5,100 trigger point at this black line, we are expecting macro continuations upwards. Any correction, whether it be to 5,100 or 5,000, should be considered a healthy higher time frame correction, which would result in continuations on the higher time frame. It is only if this trigger point, this 5,000 level, this 5,000 area of psychological and support now breaks, would we expect a higher time frame correction to retest these December lows and of course our prior all-time highs back in 2022. The same goes for all the Dow Jones over here, looking very good. The only difference we do have a higher support at 39,000 again, and we do have our 38k support, exactly the same thing. Short-term corrections, healthy, provided 38k holds. Any correction even down to 38k is likely going to result in a continuation back upwards. It is only if we drop below that 38 will we fill that gap on the VIPV and retest our prior all-time high as support. Overall, looking very strong. So without further ado, a quick word from Bitget and BingX, and we'll jump on in to today's analysis. I wanted to briefly interrupt today's video to discuss the two exchanges we use on this channel, Bitget and BingX. So which exchange should you sign up to? If you look to the right hand side of the screen, you're going to see the list of differences in relation to KYC requirements and the countries these exchanges offer services to. The first link down below being the Bitget link, and the second link down below being the BingX link. No matter which link you sign up to, you're going to get up to 15% discounts on your trading fees, up to $5,000 in trading rewards, and of course, you'll get access to every single MegaWhale exclusive bonus campaign we run on these exchanges. Alongside that, Bitget and BingX are incredibly similar. They are both ranked top 10 in terms of trading volume. They both have extensive liquidity pools and market pairs offering up to 125x leverage. And most importantly, they both offer protection funds for their users to protect you against any third-party hacks. So get started now and support the channel by clicking the links below. Thanks for listening. Okay team, let's head over and jump into the charts. So today, talking about the weekly candle, we have 6 days remaining until that weekly candle close. Jumping over to the monthly charts, discussing the significance, and we're talking this is one of the most major events for Bitcoin we have seen, if not for the last couple years. This is the retest and potential monthly candle close above that prior all-time high. We're going to be discussing exactly what that means in the video, but we'll start on the short-term chart. So in the last 24 hours, we have seen that falling, expanding wedge break upwards. If you've been following our channel, you would know we were pretty much the only people telling you guys, everyone was so freaking bearish. We're like the only people telling you guys that support is support until it is not, while we are sitting above a double confluence point of a 2-month-long uptrend, while momentum was resetting and turning positive again, and while we had this horizontal support, which is not only a short-term support, but a higher time frame support of 60k, the probabilities were in favor of a bounce over in favor of a correction. If you look at our trading channel, our VIP, we took massive trades down at that position, entering at 60,865 on that trade, up 66% on that one already, and on our second Bitcoin long entering at 62,000, we're up over 100% on that trade already. So we were actually putting our money where our mouth was. We were jumping in those positions at that time, at that retest, while many people were screaming for lower. So we've actually seen the price action bounce now. We've seen that move toward the upside. The biggest question is, are we able to sustain above 69,000 moving into that weekly and monthly candle close, or will the bears reclaim control as the majority are now flipping aggressively bullish again after this rally? We discussed why you need to plan and prepare your moves so you're not chasing the market. You are acting prior to these movements. If you're chasing the market, you are always going to be wrong or late. So let's discuss, if we take a look primarily at our support levels. We are looking at our 60k level. We are now looking at our 65.8 level. We are looking at our 69k level, and then we have got our resistance over here at 74,000. So to keep it nice and easy, guys, we're gonna be taking a look at our key levels first. So our upper, okay, and our lower level. Upper level at 74,000. Again, a break above that level. We are expecting a continuation aggressively upwards. Of course, a break above 74,000 will likely result in a monthly candle close above 69,000, and we'll be entering a new all-time high territory, so price discovery for Bitcoin. For us to see a higher time frame correction, we need to drop below 60,000. Again, what I did in yesterday's video, and I'll do it again, if we delete everything on the chart and throw our support line down over here, we can see technically we are in a uptrend and we are a bullish above the support, and we are bearish below it. So provided we remain above that 60k level, we are expecting the trend, which is this 2-month-long uptrend represented by this diagonal trend line, to result in the price action continuing in a overall upward trajectory, provided again that trend line holds and our area of major support holds. If we fail to remain above that area of major support at 60,000, only then do we run a risk of a higher time frame correction to fill this volume gap on the VIPV. First divot, 58k, second 52. So we're looking 58 and 52 if 60k is broken. However, there's no indication that will occur yet, as we have 1, 2, 3, 4 levels of support before we even break down from that level. So a lot of distance needs to be taken up by the bears before we can even consider that as a possible scenario that will play out. Until then, of course, we are sitting above our major level of support at 69,000 to 65,800. Now, these two levels are very important. As we discussed in the other video, this is our neutral territory. If we drag this chart to our macro chart, we can see the distance that I just went ahead and drawn out between the 69 and the 65.6 level, okay, is the exact distance between the all-time high of 2021 and the weekly high of that same candle. It is this distance, or what we call the danger zone. And as you can see right now, the price action is breaking above the danger zone on that weekly candle. So we'll come back and discuss this in just a moment. Moving back to the short-term charts, let's discuss the bullish case scenario for a continuation higher and the bearish case scenario for a possible correction and what we are looking out for. So first and foremost, guys, the bullish case scenario, taking a measured move analysis of the prior structure. We take the high to point 1 of the formation, apply that to the breakout point, and you can see the measured move of the falling expanding wedge is indicating a possible range target of as high as 74,000. That is the range of which the price action is able to move within. If we take a look at our structural levels, we have 69k, and our next level of resistance is sitting at 74k. So we have now got confirmation that the range of which our structural pattern is suggesting the price action could move within is indeed a range of price action between two key levels of support and resistance. So we do have an area over here where we could see the price action develop and continue in that trajectory, provided 69k is able to hold. So that will take us to our bearish scenario in just a moment. If we do want to see a continuation to 74,000 and an eventual break of the level, as we said in yesterday's video, we need to sustain above our RSI downtrend. If we take a look at the RSI really quickly, we had two trend lines we were specifically looking at. So let's go ahead and just circle, or should I say put a box around both of these just so we can see them a little bit better. We have got the RSI on the downside and the price action on the upside, and we can see that the RSI is a derivative of the price action itself. This trend line represents the overall momentum in price action ever since the break into this range at 60,000. If we look at our other trend line, that represents the momentum in the price action ever since that first initial top and bearish divergence continuing into that downtrend. If we look recently, we broke out. Okay, we broke out of that RSI, and resulting in a positive momentum shift resulted in a breakout of that falling expanding wedge. If we want to see a continuation higher through that 74k region, we absolutely need to see the momentum sustain above this downtrending diagonal resistance. While this area acts as resistance, technically we still have negative momentum within this entire cluster of price action, and we cannot expect the price action to continue through 74 until momentum flips back positive. So on the broader scale, we do still have a possibility of a correction. It's not all out of the woods yet. We have made some very solid ground. If you took longs over here, you've moved your stops into profit, you've taken profits, you've won this move, you can't lose, you've done a fantastic job. But we do have to be realistic to expect a continuation through 74 now. We do need to see sustain above this RSI downtrend. We need to see the momentum flip positive. So that now takes us to our bearish case scenario. What would have to happen for the bears to reclaim short-term control? Let's jump in. So primarily, again, we are looking at our key levels of support and resistance. Provided we remain above 69,000 and 65,800, we are technically going to be bullish towards 74k. It is only if we come down and drop back below their 65.6 level, 65.8 level, which would result in most likely a breakdown of this uptrend, would then we result in a short-term downtrend back to 60k. So remember, the bearish target right now, if we validate the bearish triggers, which is a breakdown of our lower level of support and our overall 2-month-long uptrend, that target would take us to 60,000. It wouldn't take us to 52,000 or 58. Those only occur if we lose 60k, but the target would be 60k if that occurs. Again, overall, it is unwise to assume that will happen while we have broken out of a trend, while we are sitting above support, while we are sitting in an uptrend, while the momentum on the short term is positive. It is unwise to assume that would happen as of right now. So overall, looking fantastic. Let's go ahead now and discuss that weekly candle. So as you can see on the weekly chart, we have exactly 6 days until the weekly candle has closed. And if we just take a little look back in the past over here at the last 7 days, you can see how deceiving that 1 week candle was. We saw a huge correction down to 60,000. We saw that wick completely eaten up within that last 2 days of that weekly candle. And now we have seen this current weekly candle engulf, bullish engulf the prior candle and actually break above that 69k level, showing significant strength. This is a display of significant strength. It shows us that the buyers were stepping in over here aggressively and continue to push the price up past that opening price of the prior candle, which is significant. It is massive, okay? Now, I can see why a lot of amateur traders or just unexperienced analysts were getting scared and expecting continuations down at this point. Again, if you're going off what the chart looks like, okay, if you're visibly looking at the chart and you're taking what it looks like to formulate your decisions and opinions, you are going to be very susceptible to bias, okay? You have to base your decisions on leading data. I say it all the time. Using stuff like I use, like momentum, to gauge the strength between the buyers and sellers, which then result in the price action moving in specific ways. The price action itself can be very deceiving, and if you're just simply going off what it looks like, you're going to be wrong more than you're right, as you have internal biases that could definitely impact the directions you believe the price action will move in. Your job is not to predict where it's going to go. Okay, that's not your job as a trader. Your job as a trader is to analyze the data, which is again derived from buyers and sellers. Buyers and sellers make decisions based on economic events, all these other stuff. We're not going to get into that, okay? And formulate different scenarios and assign probabilities to those scenarios based on your experience, based on your understanding of market context, broader economic conditions, and again, short-term strength between buyers and sellers, and then position yourself with the most likely scenario. If you're sitting here saying Bitcoin's going to go down over here because it needs to see a pullback because we're up 8 weeks in a row and we have to see a correction before we go up, that is pure speculation, pure emotion. It doesn't mean anything. Remember, guys, I've been around here a long time. All my videos on the channel, I saw the same thing when I told you guys up over here was the top. I told you guys up over the top. I was one of the first people to say the 14th of November. Go back and check it out. Everyone was telling me, Whale, you were wrong. Whale, you don't know what you're talking about. Blah, 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 blah. The majority are always wrong. The bias always late. The problem with being first is you're always going to be seen as wrong by the majority. When I told you I was buying at 18 to 16.5k, the same thing happened. We have to go lower. We have to go to 12k. You're wrong. You don't know what you're talking about. Same thing happened over here. Same thing happened over here. Same thing happened over here. It's happening over and over and over again. When you're judging and basing your decisions on emotion, you are going to be irrational. You're going to delude yourself, and you're going to be wrong more than you're right. It is not about being right 100% of the time. It is about having a strategy, having a plan, and be able to support your decisions by data. And regardless if you're right or wrong in one trade, over the broader spectrum, you are going to be right more than you are wrong, and you are going to profit. And that is what trading is about. It is not about being right. It is about making profit. That is what matters. So let's go over to the macro charts now and discuss what is happening. And I said at the start of the video, and I'll say it again, this is by far one of the most important weeks for Bitcoin since 2020. And let's explain why that is the case. At the moment, we are retesting, we have not quite done it yet, but we are retesting the prior all-time high on the monthly chart. The last time we did that was all the way back over here on November 2020. That is where the date comes from. That was exactly 1,216-ish days ago. So it's been a very, very long time, okay? What we noticed in the prior retests was when we broke a monthly candle above that level, that is when we saw the parabolic phase of the bull market start. Now, how can I say that without being speculative? We look at something called the trend angle. So let's take the trend angle out and take a look at the trend angle from the low to that point, and then from that point to the next all-time high. What we can see is the angle of the trend, and the angle of the trend is simply a reflection of overall strength over a period of time. The steeper the angle, the more aggressive the trend. We can see in the first cycle we went from 40 degrees, okay, all the way up to 71 degrees, from 39 degrees to 52 degrees. Now, a lot of people are going to say, well, can you apply this in the future? It is on a logarithmic chart, so it's not going to be entirely accurate, but the change is still relevant. The change in degrees is still, is still going to be very, very relevant. So what we are seeing here is the moment we break a monthly candle close above there, we have a significant shift in high time frame strength, volume, volatility that lasts at least, on average, we have 8 to 12 months from what we have seen in the past. So applying that to the future, if we see that monthly candle break this month, we would expect that we would have 8, to 12 months until the top. 8 being November 2024, 12 months being March 2025. So between November 2024 and March 2025 is when we would expect to see a top based on historical data. Will we see an earlier top? Maybe. Will we see a later top? Maybe. That is just based on historical data. Now, when we are looking at tops, we take a look at momentum. What we have also noticed is when we break over the monthly high of the prior cycle, we end up breaking that 80 point on the RSI within the month or within the month after. We can see the breakout occurred over here, the breakout occurred over here, the breakout corresponds to the point at which we break on that RSI point. What we have noticed is if we take a look at the average time it takes from the 80 point on the RSI to break out and the all-time high to set, we generally have between 7 to 10 months. So if we're looking at a top point, we take 7 to 10 months from the 80 point on the RSI. We have the 3-month window. Guess where that puts us? It puts us around March 2025. So we're looking at around about March 2025 for a top. This is what I've been saying for a long time. I've been saying this for I don't even know. I've been saying this from all the way back over here. We're looking for around that date based on, again, the data we had. So we're going to leave the video there, guys. I hope you have a fantastic day tomorrow. We'll catch you guys in the next one on Sunday. If you've got any questions, leave them down below. Let me know what you think. Do you think we're going to see the monthly candle close this month? If not, it just gets delayed to another. Of course, in 24 days, we do have the halving event, which is a pretty big driver for overall price action for Bitcoin, which we'll definitely be paying attention to. So see you guys in the next one. Have a good day. Catch you then. Bye.